think the markets have already anticipated this decoupling that's taking place. We do think the ECB is going to move next week, and the Fed will hold fast. But I think the key point that Fed President Kashkari was making was this issue of the neutral rate. Where the Fed may be cutting to, where that terminal rate is a bit higher than most people expect. We think that's the key message coming forward here. And that means there's a floor on where bond yields can go, especially as we move into 2025.
So December is the call. That's the house view right now?
Yeah, we think they're going to delay. They'll want to see a bit more on the inflation front, but we think there's enough room for them to get in about one cut later this year.
Okay, let me ask you about what's happening with the stock market as well. Do the record highs on Wall Street tempt you to move to a more negative or profit-taking position on US equities? Or do you think that this move higher in a low-vol regime can continue?
We do think the move can continue, and that's because it's primarily driven by what we're seeing on the earnings front. As you point out, the NASDAQ continues to lead the way, but that's because that's where the earnings growth is taking place in the United States. As we move into the second half of the year, we think that's going to broaden out to other sectors of the U.S. economy, and we think that's going to be the next leg for the markets to move higher over the summer.